Most trading bots fail before they even place their first trade. And it's not because the automation is bad. It's because traders automate strategies that were never reliable in the first place. They automate backtests that are full of repainting. They automate hype that they just found on Twitter or TikTok. They'll even automate something that worked great last week, but then once we get to this week, they go full port and it takes a loss, and they blow their entire account wondering what just happened. But if you build a trading bot the right way, that could be one of the most powerful tools you have as a trader. A trading bot doesn't get emotional, it doesn't hesitate, doesn't chase, doesn't get bored. It just follows logic perfectly every single time. And today I'm going to show you exactly how to build a trading bot step by step using real data, forward testing, full customization controls, and a mindset that keeps you away from the hot strategy trap that destroys most traders. Let's dive into it. Okay, before you even think about automation, we need one thing: a trading strategy with real, verifiable results. Not a screenshot, not a cherry-picked 1 or 2 month span, and definitely not something that looks amazing in hindsight, but when it gets to real, live markets, it completely collapses. A bot is just a machine that's going to follow rules. If the rules are bad, the bot's gonna be bad. If the strategy sucks, well, we're not gonna make money. If the rules are untested, then the performance is unpredictable. So all that considered, where the hell do we start? I'm using AlphaInsider's strategy marketplace. This is not a sales pitch because every strategy here is tracked live through Polygon data feeds, which means it can't be edited. The trades are taken, they're logged, and then we get to see how the strategy actually performs over time, and then we can pin it against other ones on the site. The performance just is what it is. It could look great, it could suck, and that's the beauty of it. That's the whole reason why this site was created in the first place, because this doesn't really exist out there. A true open marketplace for trading strategies. What we want to look for is a clean, consistent equity curve. That's not just trading 1 or 2 times in a given year, but that's got a couple of trades to back itself up. We want to see a reasonable drawdown, not something that's going to have a huge swing up and then a huge drawdown, which in this case is 51%. We also want some sort of logic we can understand and not just a massive mash of indicators all jumbled together into a trading strategy, as well as a time frame that fits your style. Let me show you this mean reversion and trend following strategy for an example. So inside the strategy, we actually get a bit of an introduction and a description with a trading view link. If we click on that link, we'll actually get a deeper understanding as to what the strategy does. What it's doing right here is it's trading in a downtrend based off the RSI. And then once we break above the 200 period moving average, the strategy pretty much just gets long and stays long as we are trending above the 200 period moving average. And so we can see that in this strategy, we had a couple of trades earlier this year, and then it essentially got long on Google and has stayed long on Google since May 23rd, collecting dividends in the process, but also just riding the trend that Google has been presenting itself as Google keeps going higher and higher and higher. Now, I can get behind this because I like this strategy as a swing trader, and it makes sense to me. This is the foundation. Everything else, the automation, the bots, the brokers, the allocations, only works if this part, the strategy, is solid. Let's talk about backtests for a second. Backtests are super nice, but they can lie to you. Most trading view strategies that you're gonna see, they repaint, or they're a prime example of curve fitting. Essentially, someone is looking at the strategy and is customizing the settings so perfectly, so dialed in, that all the outliers are captured and they all work for the benefit of the strategy, making it look really good. But then when we unpack the probabilities of that happening again, we go, I don't think that that's really likely. So what's the solution? Forward testing. Simple as that. Forward testing is the solution to that. What is forward testing? That is when we are tracking a trading strategy with live data feeds. We get to verify the entry, the exit, and we get to verify the performance. This way, we can't go back and say, well, hypothetically, if we had had these settings and done this, this, and this, it would have made us all this money. Let me show you guys an example. Here is a back test that shows 998.36% returns in the past year. It has a 40% drawdown, 258 trades, 75% profitable. That is killer. That's awesome. That's amazing. This almost looks too good to be true. The only way that I'm going to know if this actually works is if I forward test it live. That's it. And what you're going to find is that if you take a lot of trading strategies that are public on TradingView, or even that someone is using, and you forward test them, they are going to look a lot like this. When they go into live conditions and you remove the repainting and you remove the curve fitting, you get actual strategies that perform this way. And that is what we are trying to avoid. And that is why forward testing is so important. Think of forward testing as the lie detector. You can say all you want, someone could be selling you with a dream, but when it actually comes to the real market, the real trades, does it actually work? All right, so now we get to the fun part. Once we have a reliable, forward-tested trading strategy that we want to turn into a trading bot, this is where customization matters, because every great bot has good settings behind it. A couple things I like to personally have control over is the allocation to different strategies, how much of my account I am putting into a given strategy, and then can I turn the strategy on or off, or the overall bot on or off at any time if I am suspecting there's something funky going on. So on AlphaInsider, I wouldn't want to use this. I'm not going to use this strategy. But let's say I jumped down and I wanted to use this strategy right here. This one trades Intel, and it's done pretty well. It's got some decent drawdown, but it's done pretty well over the past year. If we go to the past 5 years, it's done pretty well, 200%. I would take that. I've already subscribed, so the subscribe button now says auto trade. If I want to turn on alerts, I can actually do that, so I don't even have to have a bot. I can do this myself manually if I wanted to, but the whole point here is to automate this so I don't have to be clicking the buttons manually, but if you want to, that's an option. Click on auto trade. I already have a bot set up, but if I don't have one, based on if it's stocks or crypto, you're going to have the broker options at the top, and then you'll be able to enter your public and private API keys. If you follow this video, it'll show you everything you need to know. I'm going to click on auto trade, jump into my current bot that I have running, and let's now update those allocations. So I currently had everything into this mean reversion, but let's say that I wanted to break things up and I wanted to go 25% into this one and 75% here. I could do that. If I wanted to, I can break it up by dollar amounts. For me, percentages kind of make sense, but let's say that I wanted to allocate a certain amount of this account, and let's say I wanted to allocate $40,000 to this strategy, and then what I have left, it'll tell me at the bottom, 117,279. So let's go with 110,000, leaving myself about $7,000 of cash. So I can do that. It's going to automatically take care of it for me. Click on save. And now it's going to rebalance automatically for me, and I have full controls to easily change the percentages if I wanted to at any time. I can even delete strategies if I don't want them to trade anymore, or I can turn the bot off at any time if, again, like I said, I suspect something's going on, or I just don't want to deal with potential volatility or a holiday period, or maybe the next 2 months, I just think, I don't want to have my bot running. Now, this is something that I am currently experiencing and seeing a lot of in the trading bot automation world. It is very easy to jump to different strategies. Hop over here, hop over here, hop over here. Oh, this one's doing great. I'm going to go over here. Oh, this one's crushing. I'm going to jump over here. I would caution you against that. I think it's a large reason why most traders are failing in the first place. I could take this back to manual trading. You're just strategy hopping. You are now literally just strategy hopping. It's like you were running let's say a breakout strategy, and all of a sudden it's working great, but now it stops working. You jump and you switch to a dip buy strategy. Now you're playing this versus this versus this, and you're all over the place. You're trading options, and then it's futures, and then it's stocks, and then it's crypto. Focus on one thing and truly let it play out over time to see if it's actually working. You are not going to build consistent returns if you are constantly chasing the next hot thing. The way the markets tend to work, something will work really well and it will do really well and it will look amazing, but that run won't be forever. And what ends up happening is we jump from one to the next, and we end up jumping in or catching a trading strategy as it's peaking, as it's coming off of a generational run, or it's coming off of a very, very hot streak. And then we just happen to trade it when it goes into a bad streak. And does that mean that the strategy sucks? No, because if you were trading that from, let's say, the past 6 months, you would have been able to capitalize on that hot streak. Then it has a red streak, which is fine. It might lose a couple of trades. It might lose for a couple of weeks, even a couple of months. But as long as it doesn't lose all of the gains it made, and then it kind of resumes that move back to the upside, that's still a great strategy. We just have to make sure we understand this so we don't get caught chasing the tops. Just like we can chase a stock, just like we can chase crypto and Bitcoin, we could chase trading strategies as they are coming off of hot streaks. It's the game of probabilities. If something has won 7, 8, 9, 10 trades in a row, it's been winning for weeks, months, it's up hundreds of percents in the given year, chances of that continuing, the higher it goes, are diminishing. Day by day by day, trade by trade by trade. So I'd caution you to think about the bigger picture, understand drawdowns, understand probabilities, and then you'll put yourself in a much better headspace when you start automating trades. Also, to build off of that, I want to mention that if you start to mess with your bot and you start changing allocations, turning it on and off when you think, when you don't think, you are now messing with a backtest, or you're now messing with prior performance. Once the bot is built, it has one job. Just let it do its job. The second you start trying to intervene, you are throwing off the data, and now we don't know how it's going to perform because we have data showing the strategy before you got your fat fingers in the mix. With your fat fingers, could be better, or it could be worse. So if you want to build a trading bot with no code, with verified trading strategies, I will link up AlphaInsider below this video. That is the whole point of why it was built in the first place. You can make your first trading bot with your first strategy completely for free. And there are literally hundreds of trading strategies on the site, all free to use, free to copy, free to get alerts on to see what's actually working and what's not. Thanks for watching. I'll see you guys in the next one.